Welcome back, everyone. In today's video, we're going to be looking at some naked charts and seeing if we can improve on our chart identification skills, going over some of the previous chart patterns from the last video. But we're going to take it a step further and see if we can look for access points utilizing some of these chart patterns. So first off, we're looking at the EOS dollar on the 12-hour time frame. So right off the bat, we can tell we're in a downtrend, right? Price is making lower lows and lower highs. So in a downtrend, we're going to want to look for short positions. And again, in order to get into a short position, we want to get into a high probability trade where price is very likely to continue to the downside almost immediately. So right off the bat, I see a potential bear flag right here, right? And bear flags are continuation patterns. You see them in downtrends. So just to confirm, we see price is in an ascending channel, right? It's rising until eventually it breaks down. Now, we have a bear flag. We see that we have downtrend, and we see that the volume is decreasing since the initial downtrend, right? The impulse down that made a lower low. Now, within this channel, we're going to want to look for a short entry. So again, we can look to our LTE methodology to kind of give us an access point into the market. So first, let's mark off a level, right? That's the first aspect of LTE. Well, this green candle with a little bit of higher volume than the previous marks a potential low. And if I look to my left, I see this kind of lines up with the previous resistance, right? So right off the bat, I see that this level was a resistance and now became a support potentially, but then it broke. So what do we want to do when a support breaks? In real time, we're expecting an SR flip. So support turns into resistance. So we have our level marked out. This is where we want to get into a short, right? So maybe we look for a trigger now. Now just looking at the price action within this bear flag, we see this hangman. This is a really strong indication that, hey, this level might hold after all now as resistance instead of support. So maybe it's on the next down candle closing that we get our entry right along this level at $3.79, right? Now, where does our stop go? Well, our stop should obviously go above this level, but to be on the safe side, maybe we want to set it at a previous resistance, maybe somewhere up here, right? Because we had a lot of rejection wicks, a lot of supply brought into the market. So again, we set our stop just above our level at a previous resistance. So right around $3.96. Maybe you want to tighten it up a little bit, or maybe you want to make it a little looser. That will entirely depend up to you. But let's say for argument's sake that we set it above $4, a nice psychological level. Now what's our target going to be? Well, we know that the target of any bear flag should be equal to the pull, right, from the breakdown. So from the breakdown right here, we have a pull of 86 cents approximately. So our target from our entry is going to be 86 cents. So our target from our 379 entry is going to be about $2.94, right? So just looking at this setup, we see that we have a 3.88 risk-reward ratio. And again, if you'll remember from Module 5, our risk management section, we discussed that a risk-reward ratio of 3.88 means that for every 1 unit of risk that we take, we're expecting to earn 3.88 units of it. That's a very large multiple. And given that this is a bear flag, a continuation pattern to the downside, the probability of this successfully coming out and completing is likely to be high. So these are the kind of trades we want to get into. We obviously see, we know the answer, price went down, it hit target, awesome. And we even had further downside continuation. This is just one of the ways we can utilize chart identification to get into good trades, right? So we have a classic example of a bear flag continuation to the downside. Awesome. Let's flip gears a bit and look at some bullish patterns, bullish continuation patterns on the Bitcoin chart. So right off the top here, I see a potential bull flag. Again, you only find bull flags in an uptrend since they're continuation patterns. So just looking here, bull flags are never perfect, but basically we see a nice descending structure. Price, deviates, some wicks above, a slight close above and back down, but more or less price is in this downtrend channel, right? And it isn't until we basically break out and close above and then retest it that we get our access point into the market. So again, let's first confirm that it's a bull flag because we're just watching this, right? So we see we have our impulse up, and from there volume starts dropping off. It drops off all the way until you get the volume confirmation to the upside, right? And we get our breakout. But that's a little too late to get in. We want to get in at the first sign, right? The highest probability. So just looking at this chart here, in this downtrending channel, we break out. This is our level, right? We see that this is a potential bull flag. So again, we don't want price to go below the low of around 35.30. So we're probably going to set our stop there. But where's our entry into this market? Well, for me personally, I want to see a real-time SR flip of the bull flag. So this price action right here, this wick up and subsequent retest of the bull flag, followed by an indecision candle, here's my trigger. This indecision candle is my trigger. Hey, we might be SR flipping. Let's look for an entry. So maybe your entry in LTE comes after the indecision candle. So maybe we get in on the close of this 12-hour indecision candle. 4-hour. And our stop, like we said, is going to go below the bull flag. So if we get in at around 3,570, our stop is at 3,527, just below, right? Just below this level. Now, what's our target in a bull flag? Well, the distance of the pull. So we see our pull broke out $280 worth approximately. So from our entry, our target is going to be $280. So from a 35.70 entry, our target is going to be just shy of 38.50. So here, just looking at this setup, we have a risk-reward ratio of 6.23. Again, that means we stand to earn 6 units for every unit of risk that we take. And again, since this is a high probability setup coming from a bullish continuation pattern, the likelihood that this structure plays out to target is very high. Again, these are the kind of setups we want to get into. You see the strength from bull flags and bear flags and just how we can use them to get into trades. Now, zooming out for a sec, we get our breakout. That's all fine and dandy. What do we have next? Well, this is actually a bullish pennant, if you notice. Price breaks out, and then we get this symmetrical triangle, right? Price starts consolidating after the breakout. And we can confirm that because volume drops off, right? It's going down, down, descending volume profile up until we actually break out. Now, again, here we did not get an access point. We never got a successful retest. In fact, we had a reversal right at the top of the breakout. But again, if we measured from the pull of this symmetrical triangle or bull pennant given our bias, we see that a target of $242, right? And from the breakout point, what do we notice? Wow, right on the money. It goes up $242 before doing a complete trend reversal. So again, these are some bullish and bearish continuation structures, but let's take a look at some bullish and bearish reversal structures. Let's look at a bearish reversal structure first. Let's look at the daily Bitcoin chart and see if anything screams at us. Well, right off the bat, I see actually a very large descending triangle right here, right? And if we'll notice, we first have our flat bottom, right? This is a potential resistance. Here it's a support again, 3-4 times, and on the 5th time it breaks, right? And then we have a descending trend line. And this trend line creates our descending triangle. Now again, it's important to note, with the daily time frame, you're likely taking swing trades or maybe even position trades in the direction of the larger macro trend. And it's here that we actually have to wait for an entry into the market. So The important thing to remember here is that since this is a daily time frame, this can take weeks to months to get an entry. So while we get the initial breakdown, right, what's our target going to be first of all? So measuring from the top of the triangle down to the bottom, we see a target of $4,500. Now from the breakdown point, this sends us all the way to 4,800. That's a large dip, 48%. But again, we have to wait for an entry. Just because it broke down here, we don't want to get into a short right down here after the impulse. We want to get in on a throwback, that retest of that trend line. So we wait until we get our retest. So maybe our entry doesn't come for another month, right? We break down in September and we don't get our retest until October. Using the LTE, we look for some sort of cue that the trigger that this level is going to hold as resistance, and we set our stop. Well, personally, for larger macro trades like this, I like to set my stop just below the last lower high, right? So this last lower high of around 11,000. And now if our target is going to be all the way down to 4,800, we're going to see that we still have a really nice risk-reward ratio of 2.74. That means that our stop is $1,640, but our target is $4,500. And you'll notice this is a large macro trade. Again, this can take weeks to months to play out. And if we see what actually ends up happening here, price comes back to our entry, breaks above, almost sets a higher high, right? But it doesn't necessarily. It doesn't hit our stop though, because again, we were using the last lower high in a swing trade. And what happens as we go forward? Wow, look at this. Look at this impulse down. Now again, this doesn't always play out the way it should. It can take months and sometimes it never even plays out. But this just gives you an idea of identifying a descending triangle, a bearish reversal triangle in a bullish uptrend, and how you might trade that pattern. Again, we trade pattern completions. We don't anticipate the completion. We trade after it's completed. Great. Let's move on to another bullish reversal pattern on ETH. So here we have an ascending triangle, right? So right off the bat, we see we have a flat top right here. Price loves to interact with it, reject, reject, flip, go under and break up. And we see we have an upward sloping trend line, right? Price is adhering to this ascending triangle. And again, how might we play this structure? So again, using the LTE methodology, we could literally use this top, right? $156 as our entry. And we wouldn't get that entry until we see a trigger, a valid trigger that says, hey, this level is going to hold. And where does our stop go? Well, usually above the last significant high or low. So to me, that's around $130. And our target on this ascending triangle is going to be from the bottom to the top. It's around $75. So $75 from our entry now, and we get a target of 230. So again, just looking at this ascending triangle, the asymmetric risk-reward setup here is 2.84. That's a nice trade. And again, since this is the daily time frame, we don't expect that this will happen over a day or two. This can take weeks to even months to play out. But again, we see that price does respect the ascending triangle. This is a bullish reversal pattern in a downtrend, and price goes to target. So I really hope that some of these chart patterns are starting to make a little more sense to you guys. And you can see how you can utilize some of these chart patterns, whether they're on the daily time frame or on the hourly time frame, and how you can basically use them to create trading setups. And now the more you journal these setups and how they end up playing out in accordance to your trading behavior, the stronger and more profitable your system will become in the future. Thanks for watching, and I'll see you soon.